The OECD downgrading its outlook. What's your take? Why is it much worse now than before?
Well, actually, I think the OECD, like every other international organization, is just catching up with every other forecast. And there is definitely global weakness out there. And in the United States, we also see signs of some weakness developing. And often not mentioned is the fact that there's very little business investment going on for most of this year. And that is, again, because of a lot of the uncertainty caused by the global trade conundrum that's out there.
But no recession in the outlook.
It's very hard to generate a recession in the United States when consumers are doing so well and labor markets are doing so well. But the likelihood of consumers continuing that is in question because without investment, you're not going to have productivity growth, real wage growth, and firms are going to start wondering, should we start to lay off people if our customers are not going to be at the doors? And so that's something that we should be concerned with, and the Fed is concerned with.
The thing is, if you take a look at the U.S. deficit, it's fast approaching $1 trillion. Unprecedented in an environment that's outside a recession. I mean, how do you explain that? And with that without the spending that we're seeing right now, the economy will be in recession.
Everyone talks about the need for fiscal reform, and they think about the size of the deficit. But think about what's going on with the deficit. The deficit means that it has to be financed with a lot of debt. And the U.S. starts to issue treasuries. Right now, the world is clamoring for positive yielding securities, and so easily we can finance the debt of the United States by having global investors take on positive yielding securities rather than negative yielding securities. But more importantly, we need to reform the type of expenditures. The quality of fiscal spending has to be transformed so that we have expenditures that boost productivity rather than act as transfer payments.
So once again, we're looking at the Fed to save the world.
There are limits of monetary policy, but right now, the job of the Fed is not so much to lower the cost of capital. There's not one executive out there who says it's too expensive for me to make investment, but rather, I'm not confident that my investments are going to pay off. So the Fed has to be out there and say to the world, we are there to backstop U.S. growth. Full stop. We'll do whatever it takes to backstop growth. Unfortunately, Chair Powell just doesn't have that sufficient gravitas to command a consensus on the FOMC to be able to generate a statement like that. The best he could come up with was, we'll do whatever it takes, but it might just be a mid-course correction. Now, that's not enough to generate the kind of confidence I'm talking about.
No consensus so far when it comes to whether or not another 25 basis point cut is necessary. What's your take?
Yeah, I think there's no harm in lowering rates to just provide the kind of confidence I'm talking about so investors will say, I'll put my investment in place now because I know my customers will be there. Chair Powell has not been able to get that consensus. And in fact, it's gotten to the point where the dissent that used to be internal to the Fed has now become a public dissent. We have 3 dissenters voting against Chair Powell, and that's one of the hardest things for a chairman to do is to rein back the public dissent. And it shows that Chair Powell is probably one of the weakest chairs that the FOMC has ever had because all the previous chairs have been able to generate that kind of consensus that he has not been able to.
Add to his headache is a repo mess. I mean, now he's finding himself having to pump in $75 billion, and some say he does not even know what's happening.
You know, Haslinda, as a former Fed staffer, I have to laugh because the Fed has put itself into a place with its new operating system that depends upon having a lot of reserves in the banks. What did they do? They drained the banks of reserves by offering interest rates on reserves. So the banks are shoving the reserves into the Fed, and the Fed is saying, wow, why is it that there's no reserves available to be borrowed by overnight repo investors? And so the Fed's job is actually to be a lender of last resort. It has always had that role, and the Fed can fulfill that role. And for me, a one-shot solution that solves everything would be a permanent repo facility by the Fed that says to the world, hey, you need liquidity out there for overnight repos? Come to us. There's no stigma to come to the Fed. In fact, I encourage you to come to the Fed. If they were to put a facility like that in place and they're talking about it, I think you'll see a lot of calm come back to the repo
They're
market.
Talking about it. Are you confident they will act? I mean, if
no,
that's
I'm not.
If that is a permanent fix, and why not?
Because I think that kind of dramatic change to the operating system they've just put in place kind of admits to the world, we messed up. And what central bank do you know of is willing to say, we messed up?
What are the risks now for the U.S. economy?
I think the highest risk out there is the lack of productivity growth. And the only way to get productivity growth back is to encourage technological development, and that's through business fixed investment. Something that bolsters business fixed investment would be anything that allows CEOs and CFOs to say, I'm willing to make my investment now, and not worry about the global economy. So confidence building measures, whether it's on the fiscal side, on the monetary policy side, and more importantly on the structural side, right, which people have ignored. As in all my days at the IMF, we always say to every economy, in Europe especially, you need to get rid of structural rigidities, deregulate, fix your economy so that we can have market forces work. That has always been nodded to and never implemented.
When will we see fiscal stimulus? I mean, it is about time. It should be now.
It should be now. In fact, it should have been yesterday. Germany should have implemented fiscal stimulus to try to get themselves out of what is now a recession in Germany. China should conduct more fiscal stimulus instead of just tax cuts, which are saved by consumers. And you see that China has not been effective in using fiscal policy. They really have to do stimulus in the way of real hard knock kind of spending that improves productivity, that improves investment opportunities, and that's the kind of spending the United States needs as well.
Let's pick on China. What do you think is the biggest challenge for China in the next decade?
China is facing a problem in the sense that they have a lot of state-owned enterprises that are not very efficient. Their private sector is just doing phenomenally well. And in fact, China is at the forefront of, I think, some of the high-tech industries that the U.S. wants to be part of as well. Just think about it. If you're any scientist at all who's in AI, where are you going to get the data for facial recognition? It's going to be China. You try doing that in the United States, you'll be sued. So I think, honestly, China is really at the frontier, and much of the private sector is ready to go. And what it needs are regulatory systems and policies that bolster the private sector and essentially put aside those state-owned enterprises. Unfortunately, Xi Jinping has a power base that is among the state-owned enterprises, and so he must cater to that audience. I think the trick for the bureaucrats there is to try to allow the state-owned enterprises to still exist, but meanwhile free up resources and divert them more toward the private sector.
We're seeing a slowing China. Will it be more and more difficult for China to safeguard 6% growth?
6% is a magic number, isn't it? Everyone worries the minute it dips below 6%.
Psychological.
Of course. And in fact, you would get more than 6% growth if you allowed the private sector of China to really take off. Because I think when you look at that 6%, it's a composite of that slow-growing state-owned sector and a very rapid growing, easily 7-8% private sector.